attainment of the Sustainable Development Goals, there still are issues that sort of block and restrict that trade. And these are issues like tariffs, where countries could decide, if I'm getting goods from Zimbabwe into the UK, we're going to impose a tariff of 30% or whatever other amount they want to come up with. This could be restrictions such as slow bureaucratic processes. So the red tape, you're trying to get something in through the border and it takes you 3 days just to be cleared at the border. That acts as an impediment to this trade. In some instances, it could be limited infrastructure. So if there is not sufficient road network or rail network to get goods from point A to point B, that becomes an impediment to trade. And all of these are things that are holding back trade and development across Africa. And these are also issues that we look at from a trade and investment point of view around, actually, what is it that we need to do in this space to remove these barriers to trade, to remove these barriers to investment, and ensure that trade is as free as it could be. Maybe an interesting part of this why question is, why Africa? Well, Africa is an emerging powerhouse. Everybody knows that. If you look at the data for Africa, if you look at the demographics, for example, you realize that Africa is a very young population. And in the next couple of years, in the next 10, 20 years, the majority of the consumers in the world would likely be coming from Africa, because that's where the young population is. That's where the new emerging opportunities are going to come from. On that note, actually, data says by 2050, 1 in 4 consumers will be African. You then look at this big, exciting thing that's been happening with the Africa Continental Free Trade Area, which is the world's largest free trade area, connecting 1.3 billion people. What that means is it's trying to make trade and investment as seamless and as smooth as possible for over 1.3 billion people. And that will have potential to then lift over 30 million people out of extreme poverty, drive industrialization, create jobs, and generate significant benefits for, in particular, women, because those have tended to be left behind by much of the progress that Africa has seen. Now, why is the UK a natural partner to Africa, to Zimbabwe, on issues of trade and investment? Well, to start with, we have world-class expertise in sectors that range from transport, healthcare, horticulture, you name it. We just were in South Africa, I think, a week or two ago at the Southern Africa Railway Association's annual conference. And we were looking at striking a partnership with SARA and all the railway operators in the region. And one of the reasons why we could do this actually is we have the oldest history in the world for railways, right? So we have this expertise, we have this technical capacity, we have these capabilities that we think could be valuable as we look at deepening our trade and investment ties with Africa as a continent, but with countries like Zimbabwe in particular. So what we want to do is to realize the potential of free trade and to achieve all of those things that I spoke about, that we know trade and investment can drive across the world and across Africa in particular. So maybe I'll move at this point to the what we do. I've given you a brief overview on why we think trade and investment is important, but what exactly am I talking about? What exactly are we intending to do with trade, with investment, and with private sector development and economic development in the country, in Zimbabwe, and in our partner countries that we work with? Firstly, to increase trade, right? We look at the values of trade that existed between Zim and the UK, and we go back to the early 2000s, or even before 2000s, and we compare that with the levels of trade and investment now. And what we see is potential, what we see is opportunity, where Zimbabwe used to be this massive exporter to the UK, and we feel like that capacity is so latent, it exists and Zimbabwe can build on that capacity to export and increase trade and investment with the UK. The same way we look at what we used to export from the UK to Zimbabwe and the opportunities that exist because of how sort of intertwined the two countries are in terms of their shared history, in terms of their business systems, in terms of language, in terms of education systems. So we want to increase trade. We want to increase investment. We also want to support a diversification and a development of the economy in Zimbabwe. And in cases like that, we then start looking at what the enabling environment is for economic transformation in the country. How can we support from a sound fiscal and macroeconomic management point of view? Or how can we support to build stronger and more inclusive financial systems? Even in cases where it seems like there's no immediate benefit to the UK, we are committed to helping Zimbabwe and some of the partners that we work with develop their economies, develop their trade potential, develop their trade capacity. What's become a lot more prominent, maybe as we've come out of COVID and a whole lot of things that have happened in the world in the past 3-4 years, is the need for us to build back better, to look at how do we recover our economies in a green and sustainable way. How do we make sure that any new jobs that we're creating are inclusive? And this would be in sectors such as agriculture, which is by far the largest employer across the African continent and also in Zimbabwe. This would be across sectors like renewable energy, financial services, you name it. So we've got all of these different objectives that we want to achieve, that we think are good for us to pursue as areas of mutual interest, as joint areas that all countries that participate in these kinds of things would benefit from. So maybe let me get more into the detail on the what, right? When we're talking about trade, what are we talking about? What do we do? What does the trade look like? So first, let's talk about the numbers, right? And I've taken an extract here from a report that we publish every 2 to 3 weeks that's called the Trade and Investment Fact Sheet. And the UK publishes this for all countries that it trades with. I've just provided the link at the bottom of the slide, but I'll be able to share that as well after this presentation. The latest report was published on the 1st of November for Zimbabwe in particular. And in that report, it says total trade in goods and services, that's both the exports from the UK to Zimbabwe and imports from Zimbabwe to the UK. Between Zim and the UK was 469 million in the 4 quarters to the end of Q2 2023. That's an increase of 44.3% from the previous period. So when we're talking about the previous period here, it's the previous 4 quarters to the end of Q2 2022. So that's a significant jump in the value of trade between Zimbabwe and the UK. And that's just over $500 million when you convert that to US dollars. So not insignificant. These are significant numbers. But we think that we can actually increase this even more given the scale and the scope of some of the opportunities that we're seeing in the market. To break this down, this 469 million pounds consists of 203 million exports from the UK to Zimbabwe. Again, this is a massive increase of 86.2% from the previous period. And then UK imports from Zimbabwe were about 266 million, which is another increase of 23% from the previous period. So to start with, there is trade already between Zimbabwe and the UK, and this trade is increasing. When you look at the trend, it's going up. So then, why is it going up? Why do we think it's going up? What are we doing to further support that growth in those trade numbers? I think one of the items that was mentioned earlier is that there exists a trade agreement between Zimbabwe and the UK, and I'll talk briefly about that trade agreement. We call that trade agreement the ESA UK Economic Partnership Agreement, or EPA in short, ESA is a group of countries, which is Zimbabwe, Mauritius, Seychelles, Madagascar, and Comoros, which you can see on this map. We also include Zambia in that grouping because Zambia has indicated their intention to accede to that agreement. But if you look at the map that I'm showing here, so this is basically the map of Africa. The ones that are colored in green, Zimbabwe, Seychelles, and Mauritius, have already signed and ratified this agreement. Madagascar and Comoros have signed, but they have not yet ratified, which means it's not yet in force for them. And then Zambia has not yet signed or acceded to the agreement, though they've indicated their intention to accede to this agreement. So this group of countries is called ESA, or the Eastern and Southern Africa States. And they have a trade agreement with the UK, which is what we call the ESA UK Economic Partnership Agreement, or EPA. What then are we talking about in this trade agreement? Because we normally talk about trade agreements, but not everyone is actually quite aware of what a trade agreement is, what's in there. To give you a sense of this agreement, here's just a quick overview of how it's organized and what the chapters in that agreement are. Chapter 1, your general provisions. Chapter 2, which is probably the most important bit for us, talks about the trade regime for goods. Chapter 3 is specific on fisheries, because some of the countries that are part of ESA, fisheries is a big deal or a big part of their economies. Chapter 4 talks about economic and development cooperation, which again is an interesting chapter because it's quite significant for Zimbabwe. Chapter 5 talks about areas for future negotiations, because the intention is to continue developing and enhancing this agreement. Actually, we call this process the widening and deepening of the trade agreement. And then chapter 6 just talks about the legal issues around how do you resolve any disputes and final provisions for the agreement. So this is the full structure of the trade agreement. I'll just quickly then talk to what this actually means for Zimbabwe by focusing on chapter 2 and chapter 4, but just ever so briefly. So chapter 2 that talks about the trade regime for goods has some important things in there. The first one is, if you're an exporter in any of the ESA states, including an exporter in Zim, you have immediate and permanent. I think the permanent bit is quite important because this will not change. It's there and it is expected to last in perpetuity. But you have this permanent duty-free and quota-free access to the UK. As long as your goods are originating in the ESA states, you can export your goods to the UK and enjoy this duty-free and quota-free access. And basically what that means is there's not going to be any tariffs or duties on your products, and we're not going to limit you in terms of how much of it you can actually bring to the UK. If you're a blueberry exporter and you feel like you want to export 1 million tons to the UK, there's nothing that stops you from exporting 1 million tons of your blueberries to the UK. And also there won't be any tariffs or any duties imposed on your goods. The interesting bit is this agreement, the nature of this agreement is what we call an asymmetric trade agreement. So it's not symmetric, because actually the UK does not expect the same level of immediate market access from Zimbabwe or from any of the ESA states. And what this means is there's going to be gradual tariff liberalization on the parts of the ESA states. So Zimbabwe could say, for now, we want to continue charging duties on goods coming from the UK because we're still developing our economy, or we're still developing this industry or this sector. That is fine. That is already provided for within the agreement. The expectation then is, from this increased trade, Zimbabwe would be able to develop its economy and over time then be able to offer the same level of preferential market access to the UK as the UK offers to Zimbabwean exporters or to ESA originating exports. This then also means if they're domestically sensitive goods, Zimbabwe can say, we won't liberalize on these goods because they're sensitive to our economy or they're strategic for our national interests. We won't be gradually liberalizing the market access terms on those goods. So that's the main big thing. If there's anything that you get out of what this trade agreement between Zimbabwe and the UK is all about, it is that if you're an exporter in Zim, you've got duty-free and quota-free access. And that's about the best terms you can get from a trade point of view with any partner country or partner market. Chapter 4, which I'll touch on briefly, talks about economic and development cooperation. And again, in this agreement, the UK has explicitly committed to supporting Zimbabwe and the ISA states in developing their economies. And this takes a number of different forms. We could be looking at private sector development, in particular looking at how do we develop industry, how do we support increasing the complexity of exported goods, rather than just exporting raw materials. How do we make sure we support value addition? How do we support manufacturing? How do we support industry more broadly? All the way to how do we support micro, small, and medium enterprises to export, right? Because it's not just this big firms that are supposed to be export. Smaller firms can export. Micro enterprises can export, right? We look at examples from the UK where we've got small family-owned businesses exporting around the world. We've tried to do something similar in Zimbabwe. We're working with farmers in Chimanimani, and some of those smallholder farmers are now already exporting to the UK. You've got farmers, smallholder farmers in Macheke, for example, starting to export their peas to the UK. So the intention behind this is we can find ways jointly to develop industry, to develop the economy, and to look at supporting micro, small, and medium enterprises to access global export markets. Because it's not just reserved for your big companies that have traditionally exported. And actually, it's interesting, when I speak to a lot of businesses across the country, they say, oh, we never think of exports because we just think it's not for us, or it's this big daunting world and we have no idea how we can break into some of those global markets. But you know what? You could be exporting to the UK, you could be exporting to the EU, you could be exporting to Kenya or Botswana or anywhere else for that matter. And it really doesn't matter the size of your enterprise. And this becomes quite interesting in Zimbabwe because one of the big challenges that comes up when I speak to my investors from the UK around investing in Zim or just doing business broadly in Zimbabwe is issues around currency. Even when you try to raise funding offshore, most funders would look at your business and say, if there's no export component in your business, if you're not earning in Forex, or if you don't have some kind of a Forex revenue stream, then you're exposing them to a big chunk of that significant Zim currency risk. And so you won't be able to raise any financing. You won't be able to do much. But if you've got export revenue streams, then an investor looks at you, or a funder looks at you, or a bank, or whoever you're looking at for funding looks at you and thinks, actually, I mitigate this currency risk because there's this currency or this Forex income stream that's getting into this business. So it is good to think about the potential that exists in exports. If for anything, just the possibility that you would be earning in local currency, and that allows you to defend against some of the fluctuations that would exist if you were a purely Zimbabwean dollar based company, right? We have other areas around economic and development cooperation, around infrastructure, transport, energy, ICT. We also have support looking at specific trade related issues. So how do we increase efficiency of our border posts? How do we increase efficiency in our trade facilitation? How do we make sure that we're collecting the right kind of data, the right kind of statistics? How do we support standards? How do we support intellectual property and things like that? That's all envisioned under this Economic and Development Cooperation. And it would be good, I think, for entities like ZNCC to start thinking about what actually is it that we need in the sector. How can we draw on partners that Zimbabwe already has trade agreements with, like the UK, to say, this is what we're thinking of in terms of our sector as a whole. What support exists to support some of these things, right? The worst answer you can get is a no, and that's fine, because then if you get a no, you're not any worse off than you were. But if you never try, you're missing out on a lot of the yeses that would come from a lot of these agreements that unfortunately most businesses are not aware about. In our case, most businesses I speak to in Zim and talk about the trade agreement between Zim and the UK, they will think, oh, we thought we can't export to the UK, or we thought it's difficult for us to do business with the UK. But this agreement says you can. And actually, it's not just that you can, but you've got some of the best preferential access that you can have to any market with the UK. So the opportunities to export, to trade, to seek for investment, to invest in the UK exist, and they're there. And you need to be able to know where to ask, know what to ask for, and just go for it. Do what businesses do, take the risk, and see what's out there for you. Anyway, I'm getting a lot excited talking about this. So let me move on to the next bit. So I've spoken about the one pillar of my work under trade and investment, which is the trade bit. Let me then quickly move on to the investment bit of things. And similarly, let's start with the numbers. Again, in that same UK trade and investment fact sheet, we've got data on investment flows between Zim and the UK. So in 2020, investment from the UK to Zim was recorded at £54 million. Investment from Zim to the UK was recorded at less than £1 million. There's a big caveat on this investment data, because the data that we're reporting on in this trade and investment fact sheet is data that would have come through our government systems. So either we would have been directly involved in this, or somehow it was recorded through our formal statistics. Data about investment is quite tricky to come by, because there's quite a lot of it, and a lot of it happens and doesn't get recorded formally until maybe after a year or two or even three, when UNCTAD starts recording some of this data. So what I'm just basically saying here is this is the barest minimum that we've confirmed, but the data is actually, well, the investment data would be way higher than what we have right now. And you just need to look at a couple of examples of, I'll talk about some of those examples later, of investment that we facilitated into Zimbabwe from the UK. That's already way higher than some of these numbers that we're looking at. But I'll talk about those examples as we get to the end of this presentation. So we spoke about trade, we spoke about investment. We have a couple of priority sectors that we think are quite important to us as the British Embassy or as the UK in Zim. And this is not to say that it precludes us participating in all other sectors. So we participate in all sectors as long as there's an opportunity. So it could be an infrastructure project. We can bring in investment from the UK. And in actual fact, I'll talk about one area where we've participated in the infrastructure investment in Zimbabwe. It could be healthcare, it could be education, it could be renewable energy, agriculture, it could be manufacturing, it could be services, tourism, it could be anything. There's no restriction on the sectors that we can participate in. The sectors that I'm going to touch on here are the ones that we've put right at the top of our list as being of priority for the UK, and ones that we are dedicating significant portions of our resource within the embassy to try to understand, to try to figure out how we can support those sectors, and to look at how do we proactively increase the level of trade and investment in those sectors. So the first one, which is a big one for us, is renewable energy. And why renewable energy? You probably would be wondering. It needs no telling that Zimbabwe faces a significant energy gap. And a lot of people, millions in fact, do not have access to electricity. Not just in Zim, but across Africa, right? This is one of those sectors that's common to almost every African country that we've been in or that we operate in. In Zimbabwe in particular, there was a study that was done a couple of months ago or last year, I think it was, that indicated that 80% of companies suffer disruptions that lead to economic loss because of these energy challenges. And there's obviously that climate bit where there's need to mitigate against climate change and the harmful effects of some of the traditional energy sources that we've used in Zimbabwe and across Africa. So why are we interested in this as the UK? Firstly, the UK is a leader in low carbon technology. And to illustrate this, between 1990 and 2020, our GDP grew by 75%, while our emissions fell by 43%. What this illustrates is you can actually grow your economy while reducing your emissions. So it's possible to grow in a green and sustainable way. And then we absolutely believe that energy access would lead to some of the benefits that I spoke about for trade and investment. But in particular, we believe energy access would lead to industrial, education, and digital opportunities, which are vital to this trade and investment that we speak about, which are vital to a sustainable recovery, which are vital to sustainable growth. So what are we doing in this renewable energy sector if we say that it's a priority for us? The first thing that you might all recognize from end of last year was this announcement by the Minister of Finance that Zimbabwe has got this new IPP framework, which is got a new power purchase agreement, a government implementation agreement, and a currency guarantee, which effectively, in essence, is designed to make it easy for independent power producers to set up in Zim and set up their own independent power plants. So complement what's coming out of ZESA or out of our national utility. We also were influential in the setup of what we call an international reference group, which is basically a grouping of the different missions and partners in Zimbabwe that have got an interest in renewable energy. And the idea behind that is we bring them together. We met with ZEDA, and we spoke about what our investors were raising as the key barriers to investments in renewable energy in Zimbabwe, and what we all needed to do to help resolve some of those barriers and to make it easier for investors to then invest in this sector. We've now also been actively engaging with ZESA, with ZEDA, and other partners in developing a pipeline. Actually, earlier this year, Zimbabwe and the UK signed an MOU on renewable energy cooperation and renewable energy and energy efficiency cooperation, where we expressly committed to doing everything we possibly can to support the development of the renewable energy sector in Zimbabwe, including the development of a pipeline of projects. It could be solar, it could be wind, it could be hydro, it could be anything you can think of in the renewable energy space with Zimbabwe to support this development in this critical sector of the economy. We also, in addition to this, have trade missions to the UK, where we expose Zimbabwean companies, Zimbabwean stakeholders to partners in the UK. And sometimes we bring in UK partners into Zimbabwe to expose them to the market and ensure that there's clarity on what is available on both sides of this trade and investment equation. The final bit I'll briefly touch on renewable energy is our facilitation of clean financing. So some of you might have heard of global climate funds and everything that happens in that space. The UK is one of the largest promoters of this, and in Zimbabwe, we've been working quite closely with a number of the institutions in Zim to make sure that Zimbabwean companies have access to some of this global funding and financing that's available from global pots of climate funding, basically. I'll not belabor some of those points on renewable energy. Let me move on to the next interesting sector that we think is a priority for us, which is horticulture. Again, I don't think it needs much telling how important agriculture is for Africa as a whole, but for Zimbabwe in particular. 23% of Africa's GDP comes from agriculture. In Zimbabwe, a lot of agriculture is now being driven by smallholder farmers, and a lot of it is subsistence agriculture. But it remains a very important sector because it employs the majority of the population in Zim. And we think it is one of those sectors that if we can help support the development of, it's got significant potential to uplift a lot of Zimbabwe's economy and a lot of people out of extreme poverty, improve livelihoods, create jobs, and help support the diversification and resurgence of industry as a whole. So we're interested in this because we believe that improving productivity and efficiency is good. You're reducing waste and you're supporting all of our objectives around trade and investment. But we also interested because this improves resilience in agriculture, right? And it also comes back to that climate point that I mentioned when I was speaking about renewable energy. We need to look at ways where we can support increasing resilience to climate shocks. So we had Cyclone Idai, for example, a couple of years ago, which absolutely ravaged parts of Zimbabwe. How do we make sure that these local economies are resilient to these kinds of climatic shocks? And a big part of what's affected by these climate shocks is agriculture. So if we can build resilience in agriculture, we can build resilience to some of these big shocks that happen in our economies. And then obviously improving livelihoods, poverty reduction, inclusion in global value chains, which I spoke about, where even if you're a smallholder farmer, you can get access to global value chains, you can export to the UK, right? So we're interested because of these things. And we've done quite a fair bit in agriculture in Zim. We had a program that was running called the UK Trade Partnerships Program, which is part of what I highlighted when I spoke about the farmers in Chimanimani or the farmers in Macheke being able to access and export to the UK. We've been working with HDC. We've been working with Zimtrade to look at how do we increase exports from the sector to the UK. And we've actually taken a couple of trade missions to the UK where we took some of these exporters to markets in the UK, New Covent Garden Market. We took them to the Specialty and Fine Foods Fair just to enhance and deepen this business-to-business links and make it easy for Zimbabwean exporters to actually export their horticulture produce into the UK. These are the two examples that I wanted to talk about in terms of our priority sectors. I'll just touch finally on how we actually do this. How do we do this? So we've got a range of financial and non-financial instruments that are available to us. It could be policy work, working with the government, facilitating research or supporting research, providing technical assistance. It could be direct funding, either in the form of grant funding or trade finance or investments in particular. These are all tools that we have available to us that we use in this space. The other tool that we have is specifically around market access barriers, where we are constantly surveying the market and asking our investors and our businesses, why aren't you coming into Zim? What are some of the issues that are stopping you? What are the barriers that you're facing? And as we unearth those, we then work with the government of Zimbabwe, with different institutions in Zim, to try to resolve those barriers and say, okay, this issue is stopping investment. What is it that we need to do to resolve this issue? Or this particular barrier exists. Can we provide technical assistance to help resolve this? Because we've done that in the past. Can we link you with UK research institutions? Can we link you with universities? You name it. The intention is, at the end of the day, we need to remove as many barriers to trade and investment as possible. The other big thing that we do is events and trade missions. Because at the end of the day, a lot of you might not know which partners exist in the UK. What companies are you talking about? Even if I wanted to buy equipment, who am I going to buy it from? Likewise, an investor in the UK might have zero idea about which companies can actually invest in Zimbabwe. So to bridge this gap, we host a lot of these events, a lot of these trade missions that are designed to bring together all the different stakeholders in the UK with all the different stakeholders in Zimbabwe, and then create an environment where business can happen, where trade can happen, where relationships can be built, and hopefully those relationships will then lead to the trade and investment. We also produce knowledge and data products. So earlier on, when I was looking at the numbers, I was extracting those numbers from our trade and investment fact sheet, which we publish every 2 to 3 weeks. And that has all the data about trade and investment between our two countries. But we also provide export guides to UK companies that are looking at the Zimbabwe market, and different other knowledge products that make it easy, or at least remove that initial information barrier where companies in the UK would not know about opportunities in Zim, but also companies in Zim would not know about opportunities in the UK. And then there's obvious direct support to companies on routes to markets, insights, and local expertise. The very final thing I'm going to talk about is just a couple of examples of some of the work that we've done, that I've spoken about. So I'm sure you all would know Beitbridge Border Post and the challenges that Beitbridge Border Post has had in the past couple of years, particularly around how long it was taking to move traffic through Beitbridge Border Post. And then you would know about this project to upgrade the Beitbridge facility, Beitbridge Border Post, its facilities, and sort of improve the operations. The UK is actually an investor in that project through a company that we call the Private Infrastructure Development Group, or PIDGE, in short. So we put in about 43.7 million out of the total 296 million capital cost for that project. In the manufacturing sector, we actually have investments through Takura Capital, which is an investment company based in Harare. BII, which used to be called CDC, and now British International Investments, has invested into Takura Capital, and then Takura Capital has invested into quite a number of companies in Zimbabwe, including Montana Meats, Lobels, Canes, Manica Boards, Rada Holdings, and a couple of other companies. We also have, oh, by the way, so if you're eating at any point a loaf of Lobels bread, maybe you might remember this presentation and be like, oh yeah, the UK actually invested in Lobels. And just when you see, well, I was going to say, when you see the loaf of bread, you can think of me, but I wouldn't want you thinking of me when you're eating your bread. Another company that we have is NMS Infrastructure, that's building 30 healthcare centers across the country in a deal that was valued at just over $200 million. And they've already, I think, delivered 4 out of the 30 healthcare facilities. One in Cowdrey Park, there's one in Harare South, and then there's Mataga and a couple of other places. But over the next 2, 3, 4 years, they're aiming to build 30 healthcare facilities across the country. And these would be absolutely state-of-the-art facilities with the latest in technology, etc. Finally, just on trade missions. So we've had a couple of energy trade missions to the UK. We took a delegation to the Energy Exports Forum, Energy Exports Conference in Aberdeen. We had a ministerial roadshow where we did a couple of cities in the UK earlier this year. We had several trade missions on agriculture. We actually have one that's coming up in January, I think around the 17th of January, 17, 18, 19, in Birmingham, which we call LAMA. That's an agriculture-focused one. We also have other cross-sector trade missions. We've worked on one with Zimtrade. We think we'll work on another one for early next year where we take delegations from Zimbabwe to the UK and we customize the program and get them to meet with investors, with suppliers, with buyers, you name it. Some interesting, just as a plug, interesting upcoming events. We've got a renewables roundtable with Zeta. That's for next week. We've got an HDC investor forum. That's again next week on Thursday. The following week, we've got the Africa Summit for Entrepreneurship and Innovation, but this is happening in Cape Town that we're sponsoring, and we'll have delegations from Zimbabwe as well. And then Lama that I spoke about, that's in Birmingham in January of next year. I'm mindful that I've been talking about a whole lot of things for a very long time. Let me stop here because I know I could go on and on about a whole lot of the things that we're doing as the UK, but I'm just over my time. So this is the end of my presentation. I've just put in my contact details in case you need to get in touch with me or with anyone from our team. I'd be able to sort of signpost you on who the right people to speak to would be. I'll stop my presentation here. Otherwise, thank you very much. Happy to field any questions and sort of discuss if you have any questions on any of the things that I spoke about. Thank you.
Thank you very much, Mr. Gates. From the presentation, I think that there is a high trade potential between the UK and Zimbabwe. We have seen somewhat significant numbers coming out of the presentation, say in total about 460 million in trade flows between the two countries. So he mentioned the trade agreement, and that is also supporting industry value chains through the private sector development pillar. So as ZNCC say that we stand ready to provide the business community with information, particularly those export-ready businesses regarding export markets and also existing trade support measures. Mr. Gage urged the private sector to look out at export potential in detail in terms of trading with the UK. And he mentioned that they're involved in looking also at issues to do with the trade facilitation and also issues to do with customs procedures. So the private sector is urged now to come forward with the issues, be it tariff or non-tariff measures that you are facing through when trading across borders. You also mentioned the investment priority areas in renewable energy and agriculture. So if you are operating in those sectors, I think they are quite beneficial opportunities that are in that area in terms of trade financing or any kind of funding that you need that is related to those. So at this moment, I'll hand over to Mr. Tapua Bonda to take us through, and also we will open the present to some questions.
Okay, thank you for that, Jeff, and thank you so much for the presentation, David. This really sounds exciting. I think you've almost opened like a lot of doors for a lot of people who didn't have an idea of what exactly was happening between the UK and Zimbabwe. So the first thing I want to say is a lot of people don't realize that as an embassy, you guys actually have almost like an open door policy for people coming in with questions and ideas. And this is your full-time thing. It's you have a mandate to make these things happen. I think what we need to work on our end is also have the same type of energy that you guys present, and I think it's open to a lot of exciting things because you're bringing this down to the you spoke about SME space, SME smallholders and farmers and all types of traders can come through. So that's the first thing that I want to highlight. The second thing is the increase that's gone up by 43%. Was that because there's been a change of policy? More efforts have been put in that space. How has that come up?
Yes. So the increase that's gone up, and not just this recent increase, actually. So the increases that we've been seeing the past couple of quarters are due to a number of things. And obviously, with the way the world is at the moment, you can't talk about these things without talking about how COVID sort of reset a whole lot of things, right?
Yeah.
So if we then go back to COVID resulted in significant contraction in global economies, right? Including when you looked at the trade numbers between Zim and the UK, there was massive contraction because trade just wasn't flowing as freely as it should have, right, during COVID. So part of the increases then you can attribute to that recovery from COVID. As the global economy recovers from COVID, we're trying to go back to pre-COVID levels in terms of our trade and investment. But that's just one of the explanations, or that's just one of the different variables that are contributing to this. The second thing is you would be aware that the UK exited from the EU, right? When we exited from the EU, one of the first things that was on our priorities was how do we ensure continuity of trade between the UK and these partner countries? And that's where this agreement that I spoke about comes in, the UK ESA EPA, because actually, when we were under the EU, we used to just be covered by the EU ESA EPA. But now, because we're no longer under the EU, we had to have our own trade agreement, which is the UK ESA EPA. But attendant to that trade agreement was then a realization on our part that actually we needed to do a lot more to get people to use these trade agreements. So there were a lot of initiatives. I spoke about the UK trade partnerships. It was specifically designed, in our case, in Zimbabwe's case, to make sure that we increase the level of trade between Zimbabwe and the UK under this new trade agreement. And around the same time, we also set up, so I'm from the Department for Business and Trade, we also set up offices for the Department for Business and Trade in over 20 African markets. And each of those resources was dedicated to doing everything they could to increase trade between that country and Zimbabwe. So in my case, my entire job is trade and investment, is how do I increase the level of trade and investment? What interventions can we come up with in the market? What issues do we need to resolve? So that also could be a part of the explanation around why this trade is increasing, because we are a lot more open, a lot more engaged, a lot more proactive around getting those numbers to go up, getting the trade to go up, the investment to go up. And if you look at some of the case studies that I gave, if you focus on renewable energy, for example, where I said we are quite influential in the lobbying for this new IPP framework. And once that new IPP framework is in, you start seeing companies make use of some of those things, right? In our case, as we're seeing companies starting to take an interest in Zimbabwe. If we're talking about agriculture and we say, oh, let's take a couple of companies from Zimbabwe to the UK, and then all of a sudden companies realize, I can sell to Tesco, I can sell to a Waitrose. You start seeing active business happening, and that also partly explains the increases in the trade numbers. So it's a whole lot of different things. Can't take all the credit for it, but at least what we're actively doing on our side is trying to engage on this and seeing what more we can do, because there's always more to do. There's always more to support.
Okay, okay, that's great. So another thing is Zimbabwe is a very huge informal sector, right? Obviously, there's paperwork, there's understanding and training that need for people to then to upgrade to be able to meet the standards for exports. And I'm sure the Zimbabwe National Chamber of Commerce and Zimtrade work with people locally. But do you then also actively engage with people who aren't up to par, as in training wise and stuff like that?
So we normally do all of those engagements through partners like Zimtrade.
Okay.
For example, if you're an exporter, or if you've never exported in your life as a business, and you wanted to start exporting, if you came to us, we wouldn't be much use to you, right? Because our focus, a big part of our focus is on giving you access to the UK market. And for us to give you access to the UK market, you need to have gotten to that level where you export ready, where you can export to the UK. We realize this. And actually, when you go back and you see one of the chapters that I spoke about under our EPA, it talks about economic development support or partnership, looking at how do we bring in these smallholder farmers, these small scale exporters, or these small companies, small enterprises. For those, we then work through either Zimtrade or other partners within the market to help or to come up with programs where companies can get to a stage where they're ready to export. Right now, we're running a program, a new version of the UK Trade Partnership, and we're working with female entrepreneurs in the jewelry, accessories, creative sectors that have never exported, but we're trying to get them to get to a level where they can export to the UK. We are funding it, but we're delivering it through Zimtrade and through the International Trade Center. Because we just wouldn't have the resources within the embassy to interface with everyone that comes and says, no, I want to start exporting. But you've got dedicated entities, organizations like Zimtrade, that we can channel some of our funding through to support that. In the agriculture space, we're actually funding the Horticulture Development Council. And then the HDC would then look at their members and look at, oh, how do we bring in smallholder farmers into this? Because that would be part of our mandate to them to say, we're funding you because we want you to bring in smallholder farmers into this.
Okay, thank you for that. I think I'll just take it to the floor if there are any questions.
Yes, thank you. Elizabeth Musingwa, would you want to ask your question or I should read out for you?
You can read, Your Honor. Thank you.
Okay, thank you. So a question is, under investment, do you support agriculture contract farming in order for potential exporters to be able to mobilize and build up significant volumes of raw material?
The short answer is yes. The long answer is a bit more nuanced, right? So one of the big models that we've been pushing in the agriculture sector, and remember I said we work particularly in the horticulture sector, but we do have other sectors in agriculture that we focus on. Just a caveat or a footnote on this is one of the sectors that we cannot support as the government is the tobacco sector. There's a policy on the part of our government that says we cannot support the tobacco sector as the UK government. That's not to say private companies from the UK cannot participate in the sector. They can, and actually they do. So one of the largest tobacco companies, BAT, has got UK links. But as a government, we cannot support the tobacco sector. I just mentioned that as a sort of footnote, because the tobacco sector is one of the largest sectors where contract farming is implemented. But the yes part of my question then, a lot of the work that we've been doing in the horticulture sector is looking at how do we bring in smallholders into these export value chains. And the past 2-3 years, we were working on that UK Trade Partnerships program that I mentioned that was focusing on agriculture, on horticulture in particular. And we were looking at, can we develop a hub and spoke model that works, that takes account of all the different issues that exist for smallholder farmers. So a smallholder farmer will say to you, you're saying to me I need to export to the UK, but Tesco is saying I can only export if I've got global GAP certification, for example. And I'm a smallholder, I can't get global GAP certification. Or you're saying, no, I can't export to the UK if I'm using this chemical or this fertilizer or whatever else the case might be. So we recognize this lack of capacity on the part of smallholder farmers in agriculture. And our solution was then to think about a model that's not dissimilar to contract farming, but in this case, we're calling it a hub and spoke model. Can we find an anchor farm? Can we find a lead farm? And then put our funding into that lead farm. And then that lead farm would then be responsible for onboarding the smallholders in the community around it. And I'll give you one successful example that we've had. So in Macheke, which is the piece that I was talking about, we've got a farm called City Circle. City Circle is an exporting farm. They've always exported. Well, they've exported for quite some time. What we then did was put in funding through to City Circle and said, you will use this funding to procure the inputs that are required by the farmers. You would use this to support the certification, making sure that the farmers are adhering to the standards and everything else that would be required for these smallholders to export to the UK. The cost in that case was on City Circle, but we were covering that cost through our funding. And you could see that as a model of contract farming, though we try not to pitch it as contract farming, because a big part of what we're then doing is how do we ensure that there is a balance in the relationship between the lead firm and the smallholder farmers? Because in the absence of that, there exists the possibility or the potential for exploitation of the smallholder farmers by the lead firms or the contracting firms, as you would call it. So in our case, we want this to be a proper partnership. We want the smallholder farmers to be enterprises. We want them to grow. We don't want them to be beholden to City Circle, right? Which is actually why we put in the funding and said, we're putting in the funding, you're doing the implementation, but you can't then come back and say, I'm going to exploit these farmers. So right now, what we're focusing on this model, it might not be the exact model of contract farming that you maybe are used to, but the next phase of this is looking at how do we then ensure that relationship that exists between the smallholders and the lead firm or the anchor farm is as equitable as possible. If they're earning in US dollars, how do we make sure that those US dollars are cascaded down to the farmers? How do we make sure that the lead firm is not taking a huge chunk that's not sensible out of what the farmers are supposed to have? So those are the models that we're thinking about. Those are the models that we're looking to support across different subsectors in agriculture.
Okay, thank you very much. Those who would want to ask questions, you can raise your hand. Then we can move from there. Kudzai, would you want to ask your question? Kudzai Muchena.
Hi, can you hear me?
Yes, we can hear you.
Which private sector financial institutions are you working with in the renewable space? And are you able to give any examples of private sector mechanisms or facilities?
Okay, thank you very much. Sithe Njisiwe Msiza. Please come through. Hello, Sithe Njisiwe. Okay, you can respond to that question from Kudzai.
All right. I'll start with so that question on private sector institutions. Which ones are we working with? That depends on what exactly you're looking at or what you are asking, but I'll give you examples nonetheless. So I'll start with electric mobility, right? Because actually when we look at renewable energy, we're not just looking at solar, it's wider, it's this wide umbrella under which quite a lot of things would fall. So let's start with electric mobility because that's an interesting one for us. How do we bring in electric vehicles into the country, right? So that's a question that we were asking ourselves. How do we support electric vehicles into the country? What is it that we need to do? There are a couple of models you can look at for this. The first one that we worked on was with a company called Mobility for Africa. Mobility for Africa provides electric three-wheelers in rural areas in Zimbabwe. So their model is particularly targeted at rural areas. We want to provide electric three-wheelers to women so that they can go to the markets, to healthcare workers so they can go to their clinics, to teachers so they can get to schools in a sustainable and clean way. But where do you find the funding for something like this? Who's going to fund an electric mobility project in rural Zimbabwe? In our case, we worked with a company called Infraco Africa. Actually is a company that's owned indirectly by the UK government, right? So Infraco Africa is part of the Pidge group. If you remember, I mentioned Pidge as the company that's invested in Zimborders. Pidge has under them a company called Infraco Africa that looks at infrastructure projects across Africa, including in Zim. And Pidge then put in $2 million in Mobility for Africa and said, we are absolutely behind this model, what you're trying to do with electric vehicles. Here's funding, $2 million for you to sort of expand that project. And this was concluded, I think, just over a year or so ago that they concluded this transaction. And now Mobility for Africa is looking at expanding. But that's one example where we've brought in indirect UK funding. We've actually also brought the same into the solar sector itself. Again, through Infraco Africa, they're looking at some solar projects in Zim that they will be funding themselves as the anchor investors. But I mentioned earlier that we've got a company called BII, which is the British International Investments, formerly used to be called CDC, or the Commonwealth Development Corporation. That's also another tool that we have within our arsenal to fund some of these renewable energy projects. So we've got Pidge, we've got BII, we've got Infraco Africa, we've got this family of companies that are linked to the UK or to the UK government that can provide funding into the market. Now, BII a couple of years ago actually then put in some funding into KEBS Bank. I think it was KEBS and Nedbank, if I'm not mistaken. They made available a £15 million facility, which these two banks were then supposed to on-lend to businesses in Zimbabwe. That's another avenue, right? If you're talking about global climate funding, probably one of the best banks you would work with in Zim, private sector banks, would be FBC. And we've been working quite closely with FBC to ensure that they can access the Global Climate Fund, which we as the UK are probably one of the largest contributors to at the moment. So again, that's another avenue where we're bringing in. It will obviously depend on a whole lot of issues. I've just given a few examples, but this could take any number of different iterations or different sort of combinations, all the way to having private companies. Like we've got a company called Solar Century Africa that's looking at setting up 10 megawatt plant in Zimbabwe, and they're bringing in their private financing for that. We would facilitate, we would support, but they bring in purely private funding from venture funds in the UK or private equity funds or investment funds in the UK. So we have this whole range that we can draw on when it comes to working with the private sector and funding these renewable energy projects in Zim. I hope that answers the question, including the second part that asked for some examples of facilities. If you've got something specific, I or someone from my team would be happy to actually chat through what that looks like and then maybe direct you to what the best source of funding might be from our patch of the world.
Okay, thank you very much. Stenji wrote in the chat box that she said she's interested in free-range chickens, also referred to as road runners. She's asking how best can you assist to make it possible to export to other countries? And then I'll ask Ms. Sarah Moyo to come through, and then you can respond to those two questions before we move to the next question. Ms. Sarah Moyo?
All right, thank you, Jeff, yes, and thank you, David, for your presentation. It's very informative. I'm learning a lot of things that I actually wasn't aware of. But what I wanted to ask you, David, you mentioned that Zimbabwe is part of a trade, we fall under a trade agreement that you have negotiated with our country, and which also has other member states in the region. I think you mentioned maybe Botswana, Zambia. I'm not sure if they've all actually acceded to the agreement or some are in the process. And what I wanted to find out from you is that if a Zimbabwean business wants to export to take advantage of the UK, this trade agreement, sorry, I didn't make a note of the name. If they want to take advantage of that trade agreement and export to other countries in the region, are the benefits which are applicable to export between Zimbabwe and the UK also applicable to exports which will be done by Zimbabwean businesses to other member countries in the region? And the reason why I ask that is because obviously we've got these competing trade agreements or trade areas. How then would a business decide whether or not they should export under your facility or under another trade agreement that may be available in the region? Because the way I see it is that there's now such a multiplicity of trade protocols or trade frameworks under which businesses can export. How does one decide that your trade facility is the best one?
I can take those two questions. I'll start with the one on free-range chickens. So we haven't done much actually on free-range chickens, or more broadly on the export of meat products from Zimbabwe to the UK. One of the largest meat products that was exported from Zim to the UK used to be beef, but then that was stopped a couple of years ago, I think in the late 90s or early 2000s, due to foot and mouth disease. And ever since, Zimbabwe hasn't been able to export meat products or beef products to the EU, including to the UK. And part of the reason for that is Zimbabwe would then need to demonstrate that they meet the requirements from an SPS point of view, SPS being sanitary and phytosanitary standards, including all the issues around quarantine, around traceability, which Zimbabwe hasn't demonstrated at the moment that they've fully dealt with the issue. We are aware that, so foot and mouth on the beef side, I know I'm talking about the beef side, but the principles apply as well to chickens and other meat products. Even though Zimbabwe has dealt with the issue of foot and mouth, for example, they haven't yet demonstrated that they have sufficient mechanisms in place for quarantining and demonstrating that actually whatever meat products you're sending to the UK are coming from sources that would not be contaminated by any of those diseases that the UK would be looking out for. On chickens, you're looking at avian influenza and a whole lot of other things, which I haven't looked in detail in detail because we just haven't done much on chickens. But that being said, we're working with beef and dairy farmers in Zim to try to get that resumed. And it is foreseeable that we also would be looking at other meat products and the possibility of getting those exported to the UK. On free-range chickens in particular, so Zimtrade did a study in the UK. We did that jointly last year, where we were looking at what is in demand from the UK or in the UK from Zimbabwe. So if you look at the UK market, what are some of the things that we can get from Zimbabwe that would be in demand in the UK? There are a couple of things that came up, but an interesting thing that came out of that whole thing was the significance of the diaspora component in the UK. We've got a huge Zimbabwe diaspora in the UK, And a theme that kept coming up and over again from the diaspora, Zimbabwean diaspora in the UK, was how much they miss a taste of home. It could be Cerevita, it could be Mazoe, it could be anything, it could be Madora, or you name it. There seems to be this demand from the UK of uniquely Zimbabwean goods, uniquely Zimbabwean products. Now, we were not looking at chickens, so I don't know, but maybe there's a possibility that there also might be demand for Roadrunner chickens from the UK, because it's one of those things where someone feels like actually maybe it tastes better than the non-Roadrunner chickens that I have here. So maybe there might be latent demand. I don't know. What I would recommend you do is speak to Zimtrade and say, I'm thinking about exporting chickens. Is there a market for chickens in the UK? It doesn't have to be the UK. It could be anywhere else. It could be in Botswana or South Africa or anywhere else. And then if there is a market, Zimtrade would then be able to help you walk through that journey on what is it you need to do? What are the SPS requirements, the quarantine, the traceability, everything that you need for you to be able to export the meat products. Because meat products food products in general tend to be quite tricky to export because countries like the UK have got very high standards around what you can bring in that will be consumed by their consumers in that market. So I hope that answers the question on free-range chickens. The next question on the trade agreement. So firstly, just to reiterate, the trade agreement is called the ESA-UK Economic Partnership Agreement. ESA stands for the Eastern and Southern Africa states. Those are on the one side. On the other side, we've got the UK, and we have this trade agreement or economic partnership agreement. Economic partnership agreement is just a fancy term of saying trade agreement. It just highlights that this agreement is developmental in nature and it won't necessarily be symmetric. ESA, which is the Eastern and Southern Africa states, is 5 or 6 countries, depending on how you look at it. The 5 countries are Zimbabwe, Mauritius, Seychelles, Madagascar, and Comoros. The 6th country is Zambia, though Zambia has not yet acceded to the agreement, so they haven't yet signed. The other 5, Zimbabwe, Mauritius, Seychelles, Madagascar, and Comoros, have signed. Zimbabwe, Mauritius, Seychelles have ratified this agreement, which means it is already in force. Comoros and Madagascar have signed, but they have not ratified, so it's not yet in force for them. But they're soon to ratify that. They're going through the processes of ratification. This agreement talks about exporting to the UK. So it is not talking about exporting from any of the ESA states to any of the other ESA states. It talks about exporting from the ESA states to the UK or exporting from the UK to the ESA states. That's the direction of travel, that's the direction of trade that we're talking about. However, I know you didn't ask that, but there might be a question where someone says, okay, what if I actually get my raw materials from Mauritius, add value to them in Zimbabwe? Can I still export that to the UK? The answer is yes, you can. That is covered under something called trilateral cumulation, which I won't get into the details of. But within countries that the UK has got trade agreements with, you can source your raw materials from those countries. And then when you look at what we call rules of origin, when you send that to the UK, you would be able to claim that as originating from either your country or from a partner country that the UK has got a trade agreement with. So you wouldn't have to face an issue thinking about, should I use this trade agreement to export to Zambia or to Mauritius? Because this agreement does not cover that. It only covers exports from ESA to the UK. However, and this will be my final point on this, the Africa Continental Free Trade Area is one that we support as the UK. So in actual fact, the UK was the first non-AU country to sign an MOU on that Africa Continental Free Trade Area, because we're then looking at what support we can bring in as the UK to help you export to Botswana. If you need to export to Botswana, you wouldn't be doing that through the EPA. You would be doing that through the African Continental Free Trade Area, but we would be looking at opportunities to strengthen the systems and the trade facilitation within the Africa Free Continental Trade Area. So you would have to then look at what other bilateral agreements exist between Zimbabwe and the country that you're looking at. It could be the Africa Continental Free Trade Area, it could be SADC, it could be COMESA, it could be any number of things. Obviously, part of your job would be to look at all those and see what offers you the best market access, and then ideally you should use that. I hope that answers that question.
Yes, thank you very much, David.
Right.
Okay, thank you very much. Two last questions from the chat box. We have Rowan, would you want to speak, please? Rowan?
Hello.
Yes, you can go ahead.
Yes, I just shared what you are about is Mutenga. Mutenga is an agroforestry and manufacturing company. Actually, we are the first company to manufacture bamboo toothpicks in Zimbabwe. So we are so excited about what you shared there, David. And we are happy to explore further if we can find ways where we can collaborate, because our concept is the Mutenga Renewable and Sustainable Bamboo Circular Economy concept that emphasizes on finding ways to mitigate the effects of climate change. So in a nutshell, we are fighting land degradation, deforestation, rural unemployment, and pollution through, also emphasizing reduce, reuse, and recycle. Our products are sustainable because they are all made from bamboo. So we are encouraging and also planting bamboo in our community. And we are also buying back the bamboo from the communities, thereby giving them more disposable income. We are also, in a way, providing cooking energy through the bamboo charcoal and briquettes. Thereby, the communities will not cut down the indigenous trees. In the future, we look forward to producing a green energy that is syngas that we want to use to motor our generator that will supply electricity to our plant and also the surrounding communities. So it's not a question, actually, it's about asking on ways that we can collaborate. If you heard what I shared about Mutenga, how can we collaborate with your organization? Thank you.
I'll just quickly answer that one before we get to the final question. Thanks very much for sharing that overview of some of the work that you're doing, which sounds quite fascinating. I would be happy to set up a meeting either with myself or with someone else from my team, and then you can sort of walk us through what you're doing, where you are at the moment, and then we can see where we would be able to support. And by the way, this is an open invitation to all of you on the line as well. We will share the presentation. On the last page of that presentation is my contact details. And please feel free to reach out to us. We can organize a meeting and then we can discuss and see where we can support if we're able to support, because we do look forward to that actually.
Okay, thank you. One last question from Mr. Mackenzie Dongo. He wanted to ask on behalf of someone who is into honey and would want to export to the UK. He's asking what's the way to go in terms of the process of exporting honey to the UK?
I think my answer to this one would be similar to a previous answer I gave. Firstly, it would depend on the level that you are at, whether you're exporting already or not. If you're exporting already, where have you been exporting to? Do you have the necessary certifications that are required to get to the UK? From your question, I suppose then you're asking about actually what are those certifications? What is it that I'm required to have if I wanted to export to the UK? And the answer to that is a long one and a detailed one. My suggestion then would be, in the first instance, just reach out to Zimtrade if you haven't already, and say to Zimtrade, I'm interested in exporting honey, maybe to the UK, but it doesn't have to be to the UK. It could be to anywhere else. What market opportunities exist? Because what Zimtrade have been doing is going around the world and looking at markets and sort of assessing what demand exists in those markets for Zimbabwean products. So they might be able then to tell you, oh, for honey, these are the markets that we've spoken to that have said we want to import honey from Zimbabwe. It might include the UK, it might not. That's still fine. And then Zimtrade would say, for this market, these are the requirements. For this market, these are the requirements. And then once you start building that capability, once you start getting the necessary certifications, it might be organic certifications, it might be Global GAP, it might be SMETA, it could be any number of different certifications. You then start looking at the next level, which is, I now have in place the things that I need to export. Now I need access to the markets, which is where we come in to say, you can export into the UK, but you don't have a way into the UK. Let me introduce you to these buyers. Let me introduce you to this market. Let me introduce you to this potential investor. Let me introduce you to this potential partner in the UK. So that's where we would come in. But in the first instance, initially, I would suggest speaking with Zimtrade and just asking where the markets are and what supports exist from their side, and what information they could provide on what's required for you to export that specific product. It applies for anything. So you could be thinking of Matemba, right? Go to Zimtrade and say, no, I'm thinking of exporting Matemba. What do I need to do? How do I get into this space? I see my colleague, I've got a colleague on the line, Tafadzwa, just raised his hand. I'm not sure if you wanted to jump in on that answer as well.
No, thanks a lot, David, for bringing it in. Well, I just wanted to make a comment for those that are interested in the horticulture space. Yeah, you really emphasized that there is more potential for us to engage in terms of horticulture. So I really wanted to share with the participants here that if you are interested to hear and also discuss in terms of horticulture, the investment forum that David spoke about earlier on, it's happening next week on Thursday. So we have just shared our contact details in the chat box. If you could please share with us just an email, then we can forward your details to our partner so that you can be part of this engagement. It's an opportunity for players in the horticulture sector to discuss and explore investment opportunities, and also hear some other business models that are attracting investment into the horticultural space. Thank you. I submit and over.
Thanks, Tafadzwa, for that.
Okay, thank you very much. Just for your information, those who are participating online today, for market information in terms of export requirements, tariffs, non-tariff measures, to exporting to any country, you can also visit the International Trade Center website. There are some online tools. There is the export potential map, the trade map, the market access map. So it can actually give you more information in terms of what are the requirements to export to the UK and what are the products that have highest potential for Zimbabwe in terms of exporting to the UK. And as ZNCC, we are also available to support you with that information. We are in 5 regions in Zimbabwe: Harare, Mutare, Gweru, Bulawayo, and Masvingo. And also Zimtrade has also offices in Harare, Bulawayo, and Mutare as well. So you are free to approach those institutions for market information in terms of exporting to the UK or any other country. So with that, we have come to the end of our business agenda on Friday. We would want to appreciate Mr. David Gate for the insightful presentation, and we will continue to engage the embassy in terms of information that is in relation to trade and investment. So with that, I also thank the participants for your active participation. We have come to the end. Have a great day. Thank you.
Thank you very much.
Thank you very much.
Thank you guys for that. Thank you, David. We'll definitely be in touch. I think everyone's learned, and we'll say that in short. So let's chase the opportunity, guys, and this brings a lot of optimism, a lot of positive talk in a space where there's a lot of chaos. So let's keep this up, guys. This is a good start.
Thank you very much.
Thank you, everyone. Bye.